Secondary market, so whichever the company are already issued, which is going on still trading, okay, buying and selling is going, which is the existing market. Of course, here the stock market and capital market, without intermediator, the operations cannot carry very smooth way. Each and every financial instrument having a separate risk is connected for the instrument. Anybody want to, the small saver or small investor, they are going for investing. So with the help of retail bank, they are trying to approach. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 2, Session 1, 5th semester BCom, Financial Institutions and Market. Okay, the chapter name is Capital Market and Money Market. So in the last chapter, which is related to financial system in India, but this chapter name is Capital Market and Money Market. So moving forward, my agenda, you will get more clarity about the capital market, how it is contributing for the nation economy, okay, and what are the structure and component of capital market and importance of capital market, why it is very important or scope, okay, and the functions of capital market, the players in the capital market, moving forward one by one. Now, any capital markets, when the capital are rising through the small saver, the saver, they are trying to go for investing, because the capital is very, very important for nation economic, because the overall development is completely depending on the capital. Now, capital market, which is nothing but the backbone of economic, okay, Indian back, if you are talking related to any country, so capital, it's very important. So why it is very important? Because of development, industrial development, or either you can say agriculture development. So there are different types. So obviously the capital market is a financial market where individual, institution and government buy or sell a financial security. Now the security means which is called for share, stock or bond, debenture, okay, because we are raising a fund, the investors, they are trying to go for selecting a specific instrument like shares or debenture or bonds, okay. So there are different types of financial instruments are available. So because once you are getting an investment from the saver, the saver can be individual, your business or government, okay. So obviously the same source what you are getting, finance source, which is again you are lending for the needy people, for example development or infrastructure such as stock, bond and long-term investment. You are raising a capital, the capital market, which is completely with the intention for medium term and long term, but money market, which is called for short period only. So why it is a medium term fund as well as long term fund is required? Because of construction or depending on the long term finance support and purchasing equipment or infrastructure development, okay, development of industry, the finance is required. The financial support obviously we can expect from the capital market. The capital market means which is one kind of raising a fund, okay, so which is long term fund you are raising using the specific financial instrument, stock, bond and long term funds investment. It serves as a platform to raise a fund, okay, various entity. There are different activity, either we are talking related to industry, small scale industry, medium scale industry or infrastructure development or agriculture. So if any startup, okay, any company which is going to start, obviously the finance rising is very important. So with the help of finance market, they can get a financial assistance. The primary purpose of capital market is facilitate the allocation of financial resource from saver. Saver may be your investor, the saver may be your individual, the saver may be a businessman, okay. So whatever the surplus is there which is coming under the saving part, so now they are trying to generate revenue, so using a investment concept here. So entity that need a fund for the business expansion. If the company want to expand, the business want to expand, they want to purchase equipment or machinery or acquiring a property or business property which is related, the capital rising is very important. And not only for business expansion, infrastructure development and other long-term projects, so either bridge construction, okay, one more unit you are establishing in the different geographical areas, okay, either you are trying to go for acquisition for other company, okay, merger and acquisition concept also, the fund is very important. Okay, moving forward, the structure and component of capital market. Here the structure and component which is very similar. Obviously under capital market means no doubt one is a corporate industrial finance or fund, okay, the corporate industrial security or government security, okay, you using a different financial instrument, the capital you are raising. So when we are talking related to capital market, majorly the capital market based on the time period which is only raising a fund for medium term and long-term fund. So again we further classified into primary market. Any company first time when they are issuing a shares to the general public or investor, so which is coming under primary market. But in case of secondary market, so already the existing sale, the company whatever they issue shares, so which is going for buying and selling, so that is coming under the existing market or secondary market. Under primary market is the initial platform where newly issued security. Newly issued means the company first time they are issuing a shares for the first time, so that is coming under primary market. Such as stock and bond are offered to be public for the first time. Okay, it's very clear. Corporate security means the companies are issuing a shares to the general public for the first time. Okay, government security or something different. And secondary market, so whichever the company are already issued, which is going on still trading, okay, buying and selling is going, which is existing market. So the secondary market also known as a stock market. So we call it again which is coming under the stock market. So there are different stocks are trading where existing security are brought and sale after their initial issuations. That means already which shares are available, particular company shares are there in the market. So now buying and selling process are going, so with the help of existing or secondary market. Now moving to the stock exchange. So there are in India there are 24 stock exchange. Majorly when we are talking related to two stock exchange, which is Bombay Stock Exchange and National Stock Exchange. Okay, so the stock exchange are organized by the market. Of course the stock exchange are organized, properly organized because of a capital instrument here, where the buyer and seller trade stock and other security. Other security means which is including for stock, bond, debenture, okay, so maybe mutual fund, okay, provident fund, everything which is coming under the security. So these are highly regulated and provide transparency in the pricing and transaction. So the stock exchange is one kind of regulatory authority. They are taking a responsibility for rising transaction, the fixation of price, so which is open, transparent when they are doing a trading with the help of stock exchange. Now over the counter market means there is no mediators we are finding here. So the over the counter market is decentralized, the complete responsibility, okay, the decisions which is related, a decentralization marketplace where the security are traded directly between the buyer and seller. Okay, there we are not finding any mediators or brokers, we are not finding, which is a open trader without centralizing exchange, without centralizing for example stock exchange, okay, there are Bombay Stock Exchange, National Stock Exchange. So here we are not finding here, directly they are doing a trading. It includes stock, bond and derivative. Derivative means what? A future and option contract when we are going for here. Moving forward, next, regulators. Regulators are very important because the complete capital market is regulated by the Security Exchange Board of India. So Security Exchange Board of India, under majorly we are studying Bombay Stock Exchange and National Stock Exchange. So the complete mutual fund which is related, even the which is coming under the Security Exchange Board of India only. The regulatory authority oversee and enforce rules and regulation. When the company, listed company or non-listed company, so whichever the company are offering a shares to the general public, or they are doing a primary market or secondary market, which is obviously which is coming under the security regulator control. Okay, so to ensure fair and transparent operation within the capital market. So because we need to protect the interest for the investors, so that's what the regulatory authority will be controlling or taking wild responsibility here. And intermediator, so of course here the stock market and capital market, without intermediator the operations cannot carry very smooth way. So that's what the intermediator participate the functioning of capital market by providing a various service. Okay, so there are different any investor, they are trying to invest in the security market, okay, or capital market, so they need to open a demat account. There is proper depository participant or active here. Okay, this include investment bank, like each and every bank not offering shares. The few banks only, which is only investment bank, they are providing a platform for they are connecting a link between the investors and lenders here. The brokers firm and clearing out. Next, importance of capital market. So fund mobilization. Fund mobilization means what? You are pooling, you're getting a small from the individual small saver. We are trying to pool the money. So mobilizing means properly utilizing for example, who is having a surplus, they are trying to invest for the returns. Okay, so the whatever they are accepting a investment, the same amount is going for the productivity productive channels. Okay, so here fund mobilizations is capital market provide platform for the business and government to raise long-term capital. So again and again, which is a long-term and medium-term only, which is focusing. So now getting from this small saver, so the same investment what you are getting, so which is going for the productivity activity, which is related to corporate or government, or they want to go for the infrastructure project related. Rising issue stock, bond and other financial instrument. Majorly when we are talking government related, they are giving a bond or security, so which is completely based on the development or productivity purpose only, they are raising a capital. And efficient resource allocation. Whatever you are getting a finance resource, which is capital resource, so the capital market help to allocate resource efficiently by directing investment to project. So whatever you are getting a investment from the investor, so which is going for the correct utilization for productivity or project related purpose. Okay, so here company with the highest potential return. Now company, when they are raising a fund from using a capital market, of course they want to generate a revenue. The whatever they are generating a revenue, they want to give for the investor, those who are invested. So here, and the risk diversification. So obviously investment means there are too much risk is involved here, obviously, which is completely depending on the investor can diversify their portfolio by investing in the variety of asset available in the capital market. There are different types of financial instruments are available, so which one you have to select. So here we are getting to just diverting the risk. Okay, such as stock, bond and derivative. Each and every financial instrument having a separate risk is connected for the instrument. Next one, wealth creation. Of course, when you are keeping 2 lakhs within your home, you are not generating any revenue. So at the same time, you are trying to select any instruments, you are going for investment, so you can generate the wealth here. A participation in the capital market allow individual and institution to grow their wealth over time by earning returns on their investment. For example, they are trying to invest for 2 lakhs. If they are the company are giving a return for 10%, so maybe they can receive for 2,20,000. If they instead of keeping in their home, they cannot generate. So that's why they invested for the specific capital instruments. And the liquidity enhancement, liquidity always which is whenever the liquidity position is there, means obviously even investors and the sponsor or company or corporate, they are getting a benefit. So here capital market provide liquidity to investor whenever they if they are purchasing, if they want to sell immediately, they can sell immediately, they can receive the cash. So that's what which is we are finding a liquidity position here, allowing them to buy or sell financial assets quickly and easily without taking any without taking any risk. Because we are selecting a liquidity asset, like security are coming under the liquidity asset. And the functions of capital market, under functions of capital market, which is quite similar to the component what you studied here. And here primary market, I hope it is clear. The primary market, the new company, any company are offering a shares to stocks to the stock for first time, okay, so which is coming in the primary market, so which is the initial stage, the first time. The primary function of capital market facilitate issuation of new security by company and government, okay, which is coming under primary. And the secondary market, no doubt, which is already the existing shares will be going for the buying and selling. So capital market provides secondary trading platform for where investors can buy or sell existing security, whatever it is there in the market. And price discovery, the functions of capital market, the price discovery is very important. So that's what there is one regulator authority or monitoring and controlling. Capital market play a crucial role to determine the price of the financial assets, which is including there are different types of financial assets are available. So the monitoring of the price discovery and supply and demand of dynamic along with the market information help establish a fair market price. So because the day to day the price is or increase or decrease, which is completely depending on the market condition, okay. So here risk transfer, obviously the capital risk, if I am invested, if I am trying to go transferring my risk okay to other, I can sell the instrument. Derivative instrument traded in the capital market, such as options and futures, okay. The day to day transaction what we are doing, the company which is coming under the which is we call it as a derivative here, allowing investor to hedge against price fluctuation. If there is the investors always they will decide when the share price are decrease, at that time they are trying to purchase. When the share price are increase, they are going for sale, okay. So here the transfer of risk, these functions can help manage risk in the various industries, so that they can manage the risk. And information disseminations, capital markets serve as an information hub, providing investors with financial report, news and research. So it is very important. The capital market day-to-day transactions are recorded systematically. They want to disclose for those who are keen interested. For example, the investor, before taking an investment, they need to get information which is related to the company income, okay, balance sheet, whichever it is impossible. And even you can observe with the help of news the particular company share price or increase or decrease. And information is very important. The researcher again and they are searching for the best instrument. The investor education. Of course, unless if you don't have any knowledge about the investing plan, you need to get more information. So the education is very important here, investment education. Capital market offer opportunity for investor to learn about the financial market and investment. There are different types of investment which is available in the market. So as an investor, we need to choose which investment plan will give more returns. So what is the risk factor which is connected to instruments. Moving forward, the players of capital market, who and all the players we can identify here. And here the first one, investor. The investors, which is nothing but the individual investors. So if they have any surplus, their intention to generate the revenue or returns. They are expecting returns in the future. So that's what they are trying to go for investment. So this saving amount which can be going for the productive activity. So either which is the infrastructure based development or company expansion or business expansion or purchasing an equipment. Okay, there are different purpose. So here the investor play part is very important. The investor play And the institutional investor, which is nothing but the banking sector, or either the banking sector, non-banking sector, or any institution, okay, or any small scale business, okay, they are trying to invest in the specific financial instrument. So that's what, which is purely talking related to capital market. So they are investing for the long period so that they can expect the more return. In case of if short period investment, the return is very less. So the capital market will generate more. And the issuers, now here issuers means actually when the company are offering a shares to the general public, no doubt the company, we call it as a issuer, okay, who is giving a financial product like capital market product, okay, so or instrument, capital instrument. So the company either which is a public limited company or private limited company, they want to raise the fund using a specific security like a debenture, bond, stock, or mutual fund. So they are the issuer. Now government, even the government can also issue for the government security, okay, they are issuing a government security, government debenture. So the whatever it is, they are also coming under the players. And the regulators are controlling, are taking a responsibility for regulate complete operation, okay, so which is talking related to capital market. And under regulatory, here we can say Security Exchange Commission, which is United States, okay, and if you're talking related to India, Security Exchange Board of India, so this body is controlling completely under capital market control here. And not only control, they are supervising, they are giving guidelines, rules and regulation related to issue, okay, related to investment, the complete investment process. Okay, and the central bank, no doubt in India we can say it's Reserve Bank of India is the central bank. Which is coming under the financial institution, the complete finance, banking sectors as well as non-banking system. So the completely controlled by the central bank here. Central bank often the role of monetary policy, because monetary policy related which is coming under the regulatory authority at indirectly affect the capital market through the interest rate and supply money management. So it is very important. We know the functions of RBI. Okay, and next one, financial advisor and analyst. So if you don't have any idea about investment, as an individual or any institution, they're getting an advice from the financial institute which instrument they want to invest, when they want to invest, what quantity they want to invest. We can get the advising and analysis. Even the financial system, for the financial analysis concept, the investment analysis will be taking care. And next one, financial advisor. Under financial advice, just now I told you are getting an advice from which from the advisor to go for invest before going for investment. And the financial analysis, they are analyzing the financial, okay, the company financial statement they are analyzing. Next, intermediator. So just now I told the capital market without intermediator there is no the easy function because of a dematerialization, completely electronic. So if I want to invest for any specific company share, we are selecting a broker or stock exchange, like example including New York Stock Exchange and Nasdaq. So these are the one kind of stock exchange we are finding. And if you're talking related to Bombay Stock Exchange, National Stock Exchange. And next one, brokerage firm. There are different brokers are operating within the capital market. This entity facilitate the buying and selling of the security on behalf of the investor, because investor they cannot approach for the company. They need to select the brokers here. And the investment bank, so there are specific bank, they are giving a complete investment, they are supporting, they are facilitating the investment activity. So investment bank. Okay, so how your individual account you're maintaining because of keeping your cash balance. Okay, so same thing, if you want to do a transaction for a share market, doing a share related or mutual fund related, so obviously you need to open an account called demat account, so which account is offered by the investment bank. Capital through initial public offering, IPO, simply we can call it an underwriting security. So at the time of raising a fund with the help of security, so obviously underwriter playing a very important role. If you are now, for example, the minimum subscription around 95%, if the investors are not invested, means obviously the underwriters they are purchasing at the commission rate here. And the clearinghouse, they act an intermediator between the buyer and seller. They are clearing these shares. Suppose the buyer are holding a share, they want to sell immediately, the settlement will be going, which is with the help of clearinghouse. And ensuring the smooth settlement of trade and reducing the counterparty risk. So both the party, whatever they are doing a transaction, either buying or selling or buying, so here the clearinghouse are taking a responsibility, okay. And the custodian bank, this institution safeguard and administrate the asset of institutional investor. Institutional investors means what? Here the businessman are investing, business, small scale business or large scale business or any specific financial institute are investing for capital markets. So they are getting a benefit from the custodian bank here, such as mutual fund and pension fund. So it is it's very best example, mutual fund and pension fund, which is coming under the custodian bank. Okay, next moving for the retail bank. So many retail bank offer investment product and service to their customer, making it easier to individual to access the capital market. So if anybody want to, the small saver or small investor, they are going for investing, so with the help of retail bank they are trying to approach, okay. And next one, rating agency. So the name only which is suggesting which is a rating agency. Rating agency access the credit worthiness, which is a credit worthiness of issuers. Okay, the company are issuing a share, so the company we call it as a issuers here, and their security, the security which is including bond, debenture, okay, either stock, helping investor to make informed decision, so that investors can take the proper decision. And well-known rating agency including Moody's and Standard and Poor and Fitch. Okay, so these are the rating agency. And next one, technology provider. The technology, because of electronic, the completely we are not doing a paper transaction. Okay, so which is completely we are going for the digital manner, the digital form. So using a technology, the investors in between the investors and issuers, the technology is playing a very important role. The technology company provide trading platform, data analytical tools and software solution that enable the efficient trading and analysis in the participation of capital market. Because of artificial intelligence, because of there is a specific software which is related to doing a transaction in the capital market, so the technology is taking a important role. And the next one, financial news media. It's very important because of we are getting a lot of information, financial related information with the help of financial newspaper. Best example, CNBC. Okay, they are giving a more information. NDTV profit. So the media outlet provide a news analysis and an information on the financial market, which can influence investor sentimental and decision. So if any investor before going for investment, they want to get more information about the company. Okay, what is the share price? What is the speculation? Either it is going bullish or bearish. Everything they want to get. So with the help of financial news media only, they are getting a more clarity before taking investment. Keep on watch for next section. Thank you.